Vishal and Kunal of Kanpur are cousins. Both have been investing in the share market for a long time. Both started having heated arguments about investing in the banking sector in 2024. The reason being, Vishal is quite bullish on the space and Kunal's stance is opposite. So, why do both have contrasting views? Also, what's the outlook for the banking sector? Let's have a look. Nifty Bank has given 12% return in 2023, but Government Banks Index Nifty PSU Bank has risen 33%. This implies that PSU banks have given 2.5 times higher return. In comparison to Nifty Bank, the performance of government banks indices has been quite strong. However, despite good performance, what concerns Kunal? Let's find out. On November 16, 2023, the banking regulator RBI increased the risk weightage on unsecured retail loans and credit cards for banks and NBFCs from 25%. Moody's considers this step credit positive as it reduces the risk of losses on bank loans, but it raises concerns about the slowdown in bank loan growth due to increased provisioning affecting capital availability. According to Moody's, personal loans increased by approximately 24% and credit card loans by an average of 28% in the last 2 years. During the same period, overall sector credit growth remained around 15%. Several NBFCs, which previously focused on secured categories like infrastructure, real estate and auto loans, are now shifting focus to riskier segments. Additionally, due to growing competition, the net interest margins or NIM for loans in this category are decreasing, impacting NBFCs' loan growth, which in turn will affect banks as NBFCs are regular customers receiving a significant portion of bank lending. Not only that, furthermore, in the last 5 instances, RBI has not made any changes to the interest rates despite a stable repo rate of 6.5%. The trend of rising debt in the country continues. In the second week of January, several major banks including SBI, HDFC, PNB and BOB increased their marginal cost of lending rate, which is the MCLR, in effect making various types of loans more expensive. HDFC Bank increased its lending rate by up to 0.1% and SBI raised it by up to 0.2% in auto loans. Now, despite all of this, why is Vishal so bullish on the banking sector? Well, to answer that question, according to Motilal Oswal, after a robust 33% year-on-year growth in profits in the second quarter of FY24, the expectation is for the momentum to continue in retail and business banking along with recovery in the corporate segment in the December quarter. The anticipation is for stability in the overall sector growth despite a decrease in the net interest margins (NIMs) and an expected reduction in non-performing assets (NPAs) compared to the second quarter. Speaking on this, market expert Ambrish Baliga, the net interest margins (NIMs) of banks have peaked, indicating a limited potential for further growth. Additionally, an influx of more money into the stock market may impact deposit growth. Despite banks significantly improving their balance sheets in recent years, especially government banks, there is a suggestion that they should receive valuations comparable to private banks. Now, let's take a look at their valuations. After a return of over 33% in the PSU Bank Index in 2023, Kotak Institutional Equities recently reviewed the valuations of government banks. Some smaller government banks have performed well due to a reduction in credit costs. Brokerage houses have maintained buy ratings on SBI, upgraded Bank of Baroda to add, downgraded Canara Bank and Union Bank to add, and reduced the rating on PNB as well. Ambrish Baliga believes that after the recent bullish trend, there may not be a buying recommendation in the banking sector, especially in large and government banks. While there is an expectation that bank results will remain strong in the December quarter, there are concerns about future growth and there is a possibility of a market correction of up to 10%. Now, this could affect banks, but looking at smaller banks, over a 6-month perspective, Bandhan Bank may be gradually purchased with a target range of somewhere between 280 rupees to 300 rupees and ESAF, Small Finance Bank, with a target range of say 84 rupees to 90 rupees, and for IDFC First Bank, existing investors may hold with a target range of 110 rupees to 120 rupees, provided their perspective is for a year. In conclusion, while the results of the banking sector are expected to remain robust in the December quarter, caution is advised for new investments after a significant surge in the past year. You can invest in shares of selected small banks with a 6 to 12 month perspective.